is Nuvoco.
Krasna Diagnostics Limited, one of the largest differentiated diagnostic service providers with the largest presence in the public-private partnership space in India, now makes a public issue of equity shares of face value of 5 rupees each for cash at a premium. The 100% book-built issue is being offered in a price band of 933 to 954 rupees per equity share. Opens on August 4th, closes on August 6th, 2021. Investors should read the red herring prospectus carefully before making an investment decision.
Welcome back. You're watching Buy Now Sell Now with Cheryl as well as Alex is there with me. But here's a programming note for all of our viewers who've tuned in live on the social media handles. From today onwards, till the end of this month, we will be handling the query segment from 11:20 a.m. So do note the timing, the shift in the query segment timing. We will be starting with live queries from 11:20 a.m. But let's get on board. Our first query then, and this one is from Mr. K.R. Balan. He's saying that he has 1,000 shares of MMTC that he's purchased at 50 rupees per share, and SAIL, which he's purchased at 120 rupees per share, about 200 shares. He wants to know whether he should continue to hold on to this particular counter or switch sectors. Kunal, what's your view? MMTC and SAIL is what Mr. Balan has. He's asking whether to stay put with these holding or switch away from the metal segment.
So good morning, Cheryl. What's actually happened is MMTC has surprisingly underperformed to a couple of its other peers. So typically we see the three key names which move in tandem: Dredging Corp, STC India, and MMTC. These three stocks that typically move in tandem. But what has actually happened is in the last 8-10 weeks odd, MMTC has grossly underperformed. I believe that could be on the back of some anticipation or some expectation of some event flow which could be coming by into the stock price. Now, as a near-term trade, I believe 40-42 could be a very strong support zone. So I would suggest that keep a stop loss closer to that level on MMTC. But for SAIL, I strongly believe that the metal cycle is still going very strong. SAIL is going through a patch of consolidation around this 130-140 zone. But I believe that with the near term as well as the longer term trend looking very strong for SAIL, I would suggest a hold on the stock. So if time is not an issue, then I believe SAIL could probably be held on to at least from a positional target of 180-185 over the next maybe 1.5 odd year. But MMTC, I would suggest a stop loss closer to 40-42 range.
Okay, let's get in the next question. We've got Dhananjay who's asking about Sharda Cropchem. He's got 1,000 shares at an average price of 352. This one's for you, Shahina. He's asking whether it's a good idea to add more of this counter or should he switch to another agri-chemical player?
As of now, he can hold on to Sharda Cropchem because I believe they're doing pretty well in terms of fundamental numbers. But technically, I think there is some sort of a weakness. If he wants to add, he should add only at lower levels, somewhere close to maybe 300 or 320 levels. And if he wants to add another stock, he can add UPL. I think there is a lot happening over there in terms of their new product launches, as well as the negatives that were there in terms of concerns regarding the management have now receded. So he can add that to his portfolio.
This one is from Padma, and she has Precision Camshaft and Phenolics Industries in the portfolio. Wants to know whether she should continue to hold on to them or sell and look at buying IDFC First Bank. Kunal, is that an apt move for Padma to do? Makes sense to buy IDFC First Bank or stay put with the holdings in Precision Camshaft and Phenolics Industry?
See, I think both these steps could be taken in the similar wave. So, for example, Precision Camshaft has done pretty well for itself. I think if I'm not wrong, in the last 6 odd months, the stock has done pretty well from 40 odd levels or slightly below that. It's moved up to almost 100, 110. Now it's going through a bit of a patch of correction or consolidation around this 90-95 odd range. But I believe that the medium to longer term charts look very attractive. So if you can hold on to the stock, I believe if the trends keep on sustaining for precision camshaft, you can see much more stronger and durable upside. So there are few stocks which you should typically ride the entire trend rather than looking at levels in terms of booking out profits. IDFC First Bank on the other hand, yes, there are some short-term niggling issues for the stock price, and which is why I think you're seeing the stock going through a bit of a corrective phase. But these are part and parcels in a very short term kind of a time frame. If those get absorbed, then I believe the stock would probably chart back its own territory to move up higher. So the breakout which happened, for example, for IDFC First Bank around 37, 38 mark, around 6 to 7 months back, that was a very strong breakout for the stock. So I would suggest that IDFC First Bank could be a part of a long-term structural portfolio. And I think buying at current levels as well as using dips of almost 10% from current levels as well could be a good opportunity for the stock.
Kunal, coming back to you on this one, we've got Somnath who's bought India Glycol at very elevated levels. So he's bought at the absolute peak from what I can see. He's bought at levels of 727, he says, and he's bought for the short term. What would you suggest that he should do? This is a stellar performance by the stock, but he's bought at the absolute peak.
So yes, I think 727 or 750 odd was the major highs for India Glycol, and the stock has receded post that. It's but natural that these stocks, they go through a bit of a corrective phase because of the fact that the large caps have emerged back again. So these are part and parcels, and these are phases of market trends where you typically see a phase where the mid caps outperform, and suddenly when large caps wake up, you see the mid caps underperforming or going through a corrective phase. So I think India Glycol is a stock which is also going through that kind of a phase. But I believe, Alex, that this is a very classic chart on the long-term basis. My only suggestion to the viewer would be that don't look at this as a more short-term play unless you have a lot of restrictions to go by. Then I believe it makes sense that you can probably have a stop loss to the trade. But if you can convert this short-term trade into more of a longer-term trade, I believe that the real potential for the stock would break out post that, because India Glycol, above those 600 levels, has given a multi-year breakout, and multi-year breakouts, they have a tendency to go into many years of uptrend rather than just looking at it from a short-term play. So my only suggestion would be that if possible, you should convert your time horizon from short-term to long-term on India Glycol and hold on.
Okay, this one is coming from Vinay Chaudhary, and this one is a Twitter query. He's saying that he's bought Dr. Reddy's recently, around 100 shares. He wants to know whether he should hold or sell for the shorter term. He's not actually told us at what sort of a level has he purchased Dr. Reddy's. Kunal, what should he do? How are the charts looking for Dr. Reddy's? Makes sense if somebody's already bought in recently to stay put in this counter.
So typically what happens, so this is a very interesting question, Cheryl. Typically what happens is when a large cap stock falls in a very sharp kind of a manner by 10%, 12% odd, it gets into the fancy of a lot of investors who probably believe that the stock is available cheap. So specifically from a shorter term view, this is not a good strategy, because what happens is when there is an event based correction into the stock, it typically goes into a downward drift for many months or many weeks to come by. Now that may not be beneficial for a short term trader, especially for someone who's probably playing it in the F&O segment as well. And even from a short term criteria, those short term rallies could probably be taken as good exit points for anyone who's been holding on to the stock and probably facing some even M2M losses as well. So purely on the short term aspect, I would expect Dr. Reddy to go through a drag kind of a mode. It's been one of the major reasons why the pharma index also corrected sharply when Dr. Reddy fell by more than 10% on that single day, just about a week or two back. So I believe that the stock could go through a phase of correction. So assuming if a buy price is just near about at 4,700 odd levels, I believe you should have an exit strategy over here at current levels rather than looking at it as more of a buy and hold kind of a play.
All right, Kunal as well as Shaina, I could spend all day speaking to you about these counters. They're incredibly interesting to speak about. Unfortunately, the queries are absolutely piling up and we have only about 12 minutes left. So let's take them slightly quicker. We've got a question on Exide Industries and we've got a viewer, Venkateswaran, who's asking whether it's a good long-term bet and with electrification coming up. What would you say about that, Shaina?
Well, I think for the long term it may make sense, but for the shorter term the stock is very bearish, so one needs to be careful. I think the numbers that they reported for the quarter were very decent at 40% sales that were higher, and profits also reasonably well. But one needs to be careful for the shorter term.
Okay, this query is one is coming in from Sudeep. This is on Indus Towers, and he's saying that he's purchased about 75 shares of Indus Towers at 263 rupees per share. As we know that Indus Towers is actually slipping in today's trading session. He wants to know whether he should sell it at a loss or average. And also on the other hand, we have our Twitter user as well who's messaged us on this. This is Balakrishna Sethuraman. He's saying, what's your view on Indus Tower? Shahina, what should viewers do with Indus Towers? Those who've already bought it, makes sense to hold on to it given what is happening with Vodafone Idea, and that's why you have Indus Towers that are slipping in trade. Makes sense for them to hold on, or should they look to exit?
I believe he should exit it, and to be in the sector, I think Bharti Airtel is a better bet to invest in, so he should switch.
Okay, all right, and Bharti Airtel certainly doing well for itself in trade today. I want to come back to you, Shaina, on the next one, because I think a lot of people end up buying Coal India. Sangeeta is one of them. She's been holding for 2 years now at levels of 144, but she says that the stock is not moving. Should she exit or should she keep it as a dividend play?
I think she should exit, maybe take the dividend and then exit, because I'm not too positive on the long-term prospects for Coal India. I think it is better to switch from here to maybe something like even a Tata Power if you want to be in the segment.
Okay, this one is coming in from Anuradha. She has about 1800 shares of Ashok Leyland, which she's purchased at 85 rupees per share. Wants to know whether it makes sense to add some more of Ashok Leyland at current levels, or continue to hold on to this counter for the next 2 to 3 years is the time frame that she's looking at. Shahina, Ashok Leyland definitely has seen a sharp rally from those levels. What should Anuradha do? Make sense to hold on to it and add some more, or is there anything else that she should do with this particular holding?
I would suggest she continues to hold Ashok Leyland. I personally also hold it. I think the prospects are very strong, especially with the tie-up that they're doing for the electrification of some of their vehicles. They're very well already placed in that space, and I think every dip should be used to add into Ashok Leyland and hold it for the medium to longer term.
Clear commercial vehicle strategy. Sticking with the automotive theme then, we've got a question on Motherson Sumi from Shashwati. She's bought at levels of 229 and she's got 200 shares. She's looking for a short-term view, Kunal.
So I think the viewer can probably hold on. I think auto cycle and the auto sector is going through a bit of a revival process. It may take some bit of more time for Motherson Sumi and many of these auto stocks to make a very strong and a durable comeback. But I think if the investor can or the viewer can hold on to the stock, I believe it would probably yield some good rewards over the medium to long term.
Okay, this query is coming in from Divya and wants to know whether it makes sense to buy Kajaria Ceramics at current market price for the longer term. Kunal, how are the charts for Kajaria Ceramics looking like? Makes sense if somebody wants to invest the current levels?
Well, the viewer can look to invest at current levels, but I think have a better strategy of looking to buy and time the stock when it goes through a correction or a time consolidation phase. For example, I think the month of February, when the stock topped out at 1020 odd levels, from there on it spent almost 4 or 5 months trading in a band of 1000 odd to 850, 860 levels. So you should try and use opportunity of these kind of time corrections and price corrections to average out further. So it's a good stock, good long-term play, but I believe a strategy should be buy on dips starting from maybe current levels.
Shahina, coming to you on Coromandel, and I think to a certain extent you've already answered on agrochemicals. You said UPL. I'm wondering if you would prefer UPL over Coromandel as well. Soumitra Joshi is bought, I believe, at levels of 790 a few months back, and he says that he's been frustrated with the kind of movement in the stock so far.
Yeah, I think Coromandel in terms of fundamentals is something that one can hold for the longer term. I would even think that it can go up to 1,000, but over the longer term period. And in the shorter term, it looks a bit bearish. That is why I preferred a UPL over Coromandel as of now. But I don't see any long term risk in continuing to hold Coromandel. I think they're doing pretty well in all their business segments, including chemicals and fertilizers.
This one is from MN Srinivas. He's saying he has 500 shares of IDBI Bank, which he's purchased at 42 rupees per share. Wants a long-term recommendation on this particular account. Shahina, how does IDBI Bank look over the longer term? Also, you have the impending stake sale also in this particular counter. So, over the longer term, makes sense to stay put with IDBI Bank?
This is a tough question to answer because I think there is a lot of selling that is coming into IDBI Bank. But yes, I think if you're holding for the longer term, it could be something like an option trade because there is the government that has very clearly said that there is disinvestment that is targeted for IDBI Bank. Now it will depend on what sort of valuations you get and who is the buyer. So I would actually prefer to be safe and switch to SBI Bank, SBI.
Okay. Speaking of public sector banks, we've got Seems Kumari, who's got 1,000 shares of Punjab National Bank at levels of 42. I believe we did take a fundamental view on this in yesterday's session, and the view was to buy SBI again, and this is exactly what has just been said by Shaina as well. But I'll still go across to you, Kunal, on the charts. Is there any reason why you should hold on to PNB at levels of 42?
So, the near-term charts are a bit, wobbly for PNB. Stock is trading at 38, 39 odd levels. It's been trading about the 200-day moving averages, but there is no sign of major momentum coming into the stock. Typically what happens, Alex, is that these PSU banking stocks, they are more seasonal in nature, where, for just about, a couple of expiries or a few months, these stocks, they go through a strong phase of momentum. But otherwise, you see these stocks going through a sideways price action or even a correction phase. So I think if the viewer looks at it from a longer term play, then maybe at 38, 39 levels, PNB can still be held on. But from a momentum play or from a short term play, I would recommend an avoid on PNB at current levels.
All right, this one is coming in from Sumit Kumar, and he's saying he has alkyl amines. He's bought at 1,500 rupees per share after Q1. He wants to know, can we add when there's a dip in this particular counter? Also, he wants a view on Polycab. Does it make sense for fresh entry on dips? Kunal, either of them, alkyl amines or Polycab, what should Sumit do?
So I think Polycab looks to be a more stronger chart. I would suggest a more of a buy on dips approach over there for Polycab. But alkyl amines is going through a phase of extreme overbought nature in terms of indicators. So just to give you a brief, the monthly RSI, for example, for alkyl amines is trading at 93, 94 levels, which is quite steep for the stock. And typically at such RSI levels, the pace of the rally is high for the stock, but then it becomes very difficult to try and hold on to the stock or initiate fresh longs at those levels. So I would suggest that if you can partially book out profits over here or maybe in a phased manner, that would be a much better approach. And then yes, you can probably look at Polycab as a better longer term play as well from current levels.
Okay, a few more questions, guys. If we can speed this up even further, we've got Raghupati who's asking about ONGC Shahina, bought at levels of 130. Would you prefer a downstream company though instead?
I would, the best pick in this segment would be Reliance, with the O2C likely, getting some investment and over there and growing both in terms of chemicals and upstream. So I would prefer Reliance if I want to be in the segment.
From Satya Narayan, wants a short-term target for CDSL. Kunal?
I think the stock will go through a patch of consolidation and correction. So if you're not in a hurry, I believe there is a probability stock can come back to 1200. This is what the view which I expressed almost a week or two back as well when the stock was at 1500 level. So would suggest a wait on CDSL and look at it closer to 1200 odd mark.
Shahina, Suman points out that Renuka Sugar is continuously hitting lower circuit. If he has to exit and stay in the sugar space, what should he buy?
I would say that if he's exiting Renuka, he can go into Balrampur Chini. I think that would be a better and safer bet as of now. And I think Renuka he can exit, yes.
Okay, and this one is coming in from Nayan Gandhi on DVs. He has 5 shares which he's purchased at 1,274 rupees per share. He wants to know, can he go ahead and add some more of DVs in his portfolio or switch altogether? Kunal, what's your take on DVs?
Well, you can hold on to your existing portfolio, I would recommend. But if you want looking to add, then I would recommend that you should look to add Sun Pharma at current levels. That's the fresh pharma large cap name which has given a breakout and looks extremely solid on the large cap front.
One last view, Kunal, on PIRAMAL Enterprises, bought at levels of 1710. Sagar is looking at a possible 3000 levels. Is that a possibility that you think can be considered?
Well, frankly, PIRAMAL Enterprises has been one of the few stocks which I've liked quite closely, and I've tracked the stock very, very closely as well, almost on a regular basis. So I also believe that the stock has a lot of potential. For good part of the post-COVID rally, Alex, the stock had been a big underperformer, but it's just that off late, specifically in the last 4-5 months, that you've seen some pace and some recovery coming back into PIRAMAL Enterprise. It's a very strong, very good quality stock. And I believe that the stock has potential to move up significantly higher from current levels. So the more long term you can hold, the better the gains I believe one can probably achieve in PIRAMAL Enterprise.
Alright, with that we'll come to an end of the query segment. Thank you Kunal as well as Shahina for giving us your take on SBI, as also resolving viewer queries this Thursday morning. And with that, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.
Krasna Diagnostics Limited, one of the largest differentiated diagnostic service providers with the largest presence in the public-private partnership space in India, now makes a public issue of equity shares of face value of ₹5